Last week, the U.S. Office of Science and Technology Policy released a report on the effects of proof-of-work mining operations on climate change. The report was soon followed by a White House report offering cryptocurrency networks the option to reduce the impact of their activities on the environment or risk having those activities drastically limited or completely banned in the United States. Over the past months, as the Ether merge got closer, there have also been a lot of speculations about proof-of-work mining. Several Bitcoin investors, including MicroStrategy Executive Chairman Michael Saylor, have used and are still using their platforms to educate the public about Bitcoin's energy usage and how it compares to other industries. In a recent blog post titled Bitcoin Mining and the Environment, the former MicroStrategy CEO delves deeper into the impact of Bitcoin mining on the environment, discussing issues like carbon emission, proof of work versus proof of stake, and how Bitcoin compares to other industries in terms of energy usage. Saylor links the report to a tweet stating that he has decided to reveal the truth about Bitcoin mining and the environment. The tweet reads, "Given the sheer volume of misinformation and propaganda circulating lately, I thought it important to share the truth regarding Bitcoin mining and the environment." Before we delve into Saylor's extensive report about Bitcoin and the environment, please take a little time to hit the like button and subscribe to the channel. Everything helps with the YouTube algorithm so we can reach a wider audience of cryptocurrency lovers. Also, ensure you drop your comments and observations in the comments section and turn on the notification bell so you never miss any of our videos. Thanks and enjoy. MicroStrategy's Michael Saylor recently released a blog post to end speculations that Bitcoin's mining greatly contributes to climate change. In the post, Saylor discusses 7 distinct areas, including Bitcoin energy utilization, Bitcoin versus other industries, Bitcoin value creation and energy intensity in Bitcoin versus other cryptocurrencies. Each of the topics discusses the misconceptions about Bitcoin's impact on the environment and why they are wrong. For his first point, titled Bitcoin and Energy Utilization, Saylor explains that Bitcoin miners often use excess energy that no one needs. In addition, he also states that Bitcoin miners who are wholesale consumers of energy use up less energy compared to other retail and commercial energy users. Here is an excerpt from the post. Bitcoin runs on stranded excess energy generated at the edge of the grid in places where there is no other demand at times when no one else needs the electricity. Retail and commercial consumers of electricity in major population areas pay 5 to 10 times more per kilowatt hour than Bitcoin miners, who should be thought of as wholesale consumers of energy. Saylor also points out that Bitcoin mining uses way less energy than many people think it does. The world produces more energy than it needs, and approximately a third of this energy is wasted. He continues in his post. The last 15 basis points of energy power the entire Bitcoin network. This is the least valued, cheapest margin of energy left after 99.85% of the energy in the world is allocated to other uses. For his second point, Saylor examines Bitcoin's energy usage compared to other industries. He explains that almost 60% of Bitcoin's energy usage comes from sustainable sources. According to Saylor, this makes Bitcoin the most efficient, cleanest industrial use of electricity. He also notes that Bitcoin's energy efficiency is improving at 46% yearly, the fastest rate across major industries. Saylor also explains that the halving of Bitcoin's mining rewards every 4 years contributes to its energy efficiency. Here's another excerpt from the post. The Bitcoin network keeps getting more energy efficient because of the relentless improvement in the semiconductors that power mining centers, combined with the halving of Bitcoin mining rewards every 4 years that is built into the protocol. In his third point, Saylor tops the 2 first points by discussing Bitcoin's value creation compared to its energy intensity. He notes that the network's value is currently 100 times the cost of the energy input. The blog post reads, approximately 4 to 5 billion in electricity is used to power and secure a network that is worth $420 billion as of today and settles $12 billion per day, $4 trillion per year. The value of the output is 100 times the cost of the energy input. This makes Bitcoin far less energy intensive than Google, Netflix, or Facebook, and 1 to 2 orders of magnitude less energy intensive than traditional 20th century industries like airlines, logistics, retail, hospitality, and agriculture. The Ether blockchain network has just transitioned to the less energy intensive proof of stake consensus. Several articles and social media posts have reflected on the possibility of Bitcoin switching to the same consensus to reduce its energy intensity. In his fourth point, Michael Saylor discusses how such a transition will affect Bitcoin's protocol. His post reads, the only proven technique for creating a digital commodity is proof of work. Bitcoin mining, deployed in a fair, equitable fashion, no pre-mine, no ICO, no controlling foundation, no primary software development team, no series of forced hard fork upgrades that materially change the monetary protocol. He adds that changing Bitcoin's consensus places all security and control of the network in the hands of a small group of software developers, making Bitcoin a security, not a commodity. All attempts to date have resulted in a digital asset that meets the definition of an investment contract, digital security, not a digital commodity. They all pass the Howey tests and therefore look more like equities than commodities. Regulators and legal experts have noted that proof-of-stake networks are likely securities, not commodities, and we can expect them to be treated as such over time. Saylor further explains that Bitcoin is special because it is different. It makes no sense to compare proof-of-stake networks to Bitcoin. The popular Bitcoin advocate notes, the creation of a digital commodity without an issuer that serves as digital gold is an innovation. We have accomplished this only once in the history of the world with Bitcoin. The creation of a digital security or digital coupon on a shared database is utterly ordinary. It has been done 20,000 times in the crypto world and more than 100,000 times in the traditional world. In his posts, Saylor also discusses Bitcoin's carbon emission, stating simply that 99.92% of carbon emissions in the world are due to industrial uses of energy other than Bitcoin mining. Bitcoin is neither the problem nor the solution to the challenge of reducing carbon emissions, Saylor notes in his post. It is in fact a rounding error and would hardly be noticed if it were not for the competitive guerrilla marketing activities of other crypto promoters and lobbyists that seek to focus negative attention on proof-of-work mining in order to distract regulators, politicians, and the general public from the inconvenient truth that proof-of-stake crypto assets are generally unregistered securities on unregulated exchanges to the detriment of the retail investing public. Bitcoin is not only unharmful to the environment, in fact, it is quite beneficial to it, as Saylor notes in his sixth point. He cites a report from Daniel Batten, the CEO of Genius and an ESG analyst. In May, Batten published a report stating that Bitcoin mining could eliminate 0.15% of the world's global warming by 2045. He also argued that no other technology could eliminate emissions better than Bitcoin. Here is an excerpt from Saylor's sixth point. There is an increasing awareness that Bitcoin is quite beneficial to the environment because it can be deployed to monetize stranded natural gas or methane gas energy sources. Dan Batten has written some impressive papers on this subject. It has also become clear that energy grids that rely primarily on sustainable power sources like wind, hydro, and solar can be unreliable at times due to a lack of water, sunlight, or wind. In this case, they need to be paired with a large, flexible electricity consumer like a Bitcoin miner to develop grid resilience and finance the build-out of additional capacity necessary to responsibly power major industrial and population centers. Lastly, Saylor concludes by writing, Bitcoin mining can bring a clean, profitable, and modern industry that generates hard currency to a remote location in the developing world, connected only via satellite link. All that is needed is excess electricity generated from a waterfall, geothermal source, or miscellaneous excess energy deposit. Google, Netflix, and Apple won't be setting up data centers in Central Africa that export services to their wealthy Western clients anytime soon due to constraints on bandwidth, privacy, and requirements for consistent power flow. But Bitcoin miners are not hampered by these constraints. What do you think about Michael Saylor's extensive arguments for Bitcoin mining? Please drop your comments and observations in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications for more crypto-related videos. Thanks for watching.